Hi everyone, welcome to the New Zealand Payroll webinar today. The areas we will cover this afternoon are adding a new business, we'll go through the business IRD settings, the leave categories, adding a new employee, importing historical gross earnings, having a look at the employee leave pay rate settings, process of pay run, specifically what annual holidays, sick leave, domestic violence leave entitlements will look like within a pay run. Also, when leave is taken, what the calculations are showing in the context panel. And lastly, the IRD reporting. So going through the new and departing employee details, employment information, and the employment information amendment file. So starting with adding a new business. So from your dashboard, go down to the briefcase, add a new business. Enter in the NZBN. This is a unique identifier for your business. The NZBN is a 13-digit number. If you are not a New Zealand registered business, then tick on the checkbox, I don't have an NZBN here. Enter in your business name, the business legal name, which will be the name shown on payslips, if you wish to select the number of employees you have in your business, I will just default it to 1 to 10. Enter in your New Zealand registered address if you have one. This will automatically populate the address as you type, and you can select the address from the list. If you do not have an NZ registered address, you can click on the international address checkbox here, which will allow you to enter in an international address manually. Click on next step, which will take you through to contact details, where you can enter in the contact name, the email address, and the contact phone number to be contacted in regards to any payroll issues for your business. Regarding the contact phone number, this will need to be a New Zealand registered phone number. Reason being is this is validated at the Payday Filing submission, so if it's not in the New Zealand format, it will error. If you do not have a New Zealand registered phone number or mobile number, then just leave it blank and just make sure that there's a valid email address there, so should you need to be contacted for anything payroll related. Next step is your payroll details. So select your standard work hours, which is defaulted to 8 hours per day. Select your work week start and end, which is defaulted to Monday and Sunday. How often do you process pay runs? Here you can select the pay period under which your business processes pay. We currently have weekly, fortnightly, and monthly. You can create additional pay schedules later if you pay under multiple pay schedules. You can select the industry in which your business belongs to, or you can leave it blank. And your business is now created. This is your main business dashboard now. Next, I'll be showing you how to set up your IRD settings. You can get to your IRD settings by clicking on this link as part of your action items on your dashboard, or you can go down to your payroll settings option, business settings, and IRD settings. Enter in the IRD number. This is your unique 8 or 9-digit business IRD number. Enter in the contact person's first name and last name. enter in a phone number. Once again, this needs to be the New Zealand registered phone number. So if it's a landline, it must be 9 digits, including the area code, or if it's a mobile number, it must be a maximum of 11 digits and starting with a prefix of 02. The reason being is, once again, it will get validated at the Payday Filing submission and will error if it is not in the New Zealand format. If you do not have a New Zealand phone number, then leave it blank and just make sure that you enter in a contact email should there be any payroll issues or someone needs to contact you from the IRD. Next is the Payday Filing method. You can select from a manual file upload to the IRD, or you can connect to the IRD via gateway services. The manual file upload to the IRD will generate a CSV format where you can manually submit that to your My IR portal. And the Connect to IRD gateway is the straight through processing option, so you can click a button and it will go directly to the IRD. Today we will select Connect to the IRD gateway settings, which I will show you later how that all works. And lastly, the IR 345 filing frequency. This is automatically generated now by the IRD as part of Payday Filing. You can still choose to activate this for information purposes by choosing the frequency, so monthly or twice monthly. Otherwise, you can leave it blank. Click on Save, and your IRD settings have now been set up. Next, I will run you through the business leave categories. So from payroll settings down to leave categories. The leave category setting here will be what the system applies in the pay run when processing annual holidays or alternative holiday leave entitlements taken or paid upon termination. The default applied is as per the system default setup for annual holidays and alternative holiday leave. If you create new leave categories relevant to annual holidays or alternative holiday leave, which should be applied upon termination, then you will need to adjust the termination leave category settings accordingly. We'll be focusing on alternative holiday leave, annual holidays, sick leave, domestic and violence leave when it comes to the leave categories. So firstly, alternative holiday leave. Alternative holiday leave, an employee gets an alternative holiday if they work on a public holiday that would otherwise be a working day for them. An alternative holiday gives the employee a day off at any time. For alternative holiday leave, the unit type is set as days as the system default. Now to annual holidays. As per the Holiday Act 2003, an employee is entitled to not less than 4 weeks paid annual holidays after the end of each completed 12 months of continuous employment. As such, the leave category is set up as 4 standard weeks per year based on the employee's leave year, with the leave entitlement to start after 12 months of employment. Annual holidays will accrue on the employee's yearly anniversary date, with a maximum of 4 weeks for each leave year, and the entire balance will carry over to the employee's leave balance. Next is sick leave. The employee is entitled to 5 days paid sick leave commencing from 6 months after their employment start date. Additionally, the entitlement continues every 12 months thereafter. Just to clarify, it is 12 months beginning at the end of the 6-month period, and it is not from the employee's start date. As such, the leave category is set up as 5 standard days per year based on the employee's leave year, with the leave entitlement to start after 6 months of employment. The system will automatically then apply sick leave entitlement every 12 months thereafter. The sick leave will accrue with a maximum of 5 days for each leave year and will only carry over a maximum of 20 days. The carryover amount is in addition to the leave accrued balance for the leave year. So 5 plus 15 equals the 20 days. Domestic violence leave. For domestic violence leave, an employee is entitled to 10 days paid domestic violence leave commencing from 6 months after their employment start date. Additionally, the entitlement will reset every 12 months thereafter. As such, the leave category is set up as 10 standard days per year based on the employer's leave year, with the leave entitlement to start after 6 months of employment. The system will automatically then apply domestic violence leave entitlement every 12 months thereafter, and that's from the 6-month anniversary, not from the employee's start date. Domestic violence leave will accrue with a maximum of 10 days for each leave year, but no balance will carry over to the next year. This means the leave balance will remain at 10 days or be topped up to 10 days upon each leave year. I just wish to highlight that there is no such concept of leave accrual per pay run in New Zealand. Leave entitlement will only accrue at the employee's anniversary date. So for sick leave and domestic violence leave, this will initially occur upon the employee's 6-month anniversary and then every 12 months thereafter. For annual holidays, this will occur upon the employee's 12-month anniversary and every 12 months thereafter. Now we will go ahead and look at how we can manually add an employee to the payroll file. So back to your business dashboard. There are a couple of other ways you can add employees to the business. If you click on the down arrow beside the Add Employee option, you can see them. You can start the employee self-setup and import or export employees. But today we are going to click on the Add Employee option, which will launch the 4-step employee wizard. The first section is the personal details. You will need to add in all the personal details for your employee here. The name, date of birth, and address. There is an option to enter a postal address if required as well. You can then enter an email address and phone number. Similar to the business phone number, the mobile number must be in a New Zealand registered mobile format, so must have a maximum of 11 digits and start with a prefix of 02. The employee notification is how you will notify your employees that the pay slip is available to view or download. There are available options. None and manual are the same thing, and this means the employee will not receive a notification. This setting can be used by businesses that print out their pay slips and manually hand them out. SMS means the employee will receive an SMS notification, and if this option is selected, you'll need to make sure you have a valid mobile number entered for the employee. Email is free, and the employee will receive an email to notify them their pay slip is available. The last option here is for self-service. Selecting yes for this option is granting access to the employee for their employee self-service portal. The employee will then be able to do things like view pay slips, apply for leave and expenses from the portal. They will also be available to download the WorkZone app to their smartphone, which is available on iOS and Android, where they will be able to perform these tasks straight from their phone. The next step is to set up the banking and the KiwiSaver details. For bank details, there are 3 options available of electronic, which is via bank file, a manual deposit, or as a cash or check. Account name is auto-filled from the employee's name. You can manually delete the auto-filled account name and enter in the account name as well. The account number field is 15 or 16 digits, which consists of the bank code, account number, and suffix. Down to KiwiSaver. You must automatically enroll new employees into a KiwiSaver and provide the employee information KS3 fact sheet to new employees. This is downloadable by clicking on the following link. The employee can choose to opt out between week 2 and week 8 from their employment start date by completing a KiwiSaver opt-out request form. It is your responsibility to verify that the employees meet all requirements for enrolling, opting in, opting out, or taking a savings suspension. The KiwiSaver options are, which is from the drop down here, automatically enroll, opt in, savings suspension, opt out, not enrolled, or ineligible. The employee contribution can select from 3%, 4%, 6%, 8%, or 10%. And the employee contribution, you must contribute at least 3%. You can contribute more if you wish by entering the relevant value in the employer contribution field. If the IRD is already aware of the employee's KiwiSaver status, then you can tick on this checkbox. Once the banking and KiwiSaver details are complete, and click on Next to your employment details section. You can enter all the employee details for your employee here. Select the employee start date, and then select the employment type options, which are casual, full-time, or part-time. The next field is where you can enter the primary location for the employee. You can set up different locations in your payroll file. They can be physical locations such as Auckland or Wellington, or department locations like operations or sales. The employee's primary location is where the costings for their earnings will be attributed to by default if no other location is selected. Then you can select the pay schedule for the employee. This is the frequency you will be paying the employee, We have 3 pay schedules frequency available: weekly, fortnightly, and monthly. You can set up your pay schedules via your business pay schedule settings, which will then appear in the employer wizard to select from. You will then need to enter the pay rate for the employee. You will have the option to add the rate as per hour, per annum, or per day rate. Then enter the number of hours the employee would normally work in a week. I've entered 40 hours per week, which is equivalent to an 8-hour day, but you can add the number of hours that are relevant to your particular business and employee. It is essential that you enter the agreed number of hours the employee will be working each week. This figure also determines the leave rate paid for the employee. As mentioned, standard hours per day, this will use the business standard daily hours as the default. If the employee works different hours per day to that set in the business daily hours, then untick the Use Standard Business Daily Hours checkbox and then enter in the hours per day for the employee. Remember that this figure determines the leave rate paid for the employee. Then you can select the primary pay category for the employee. I'm going to select the primary, permanent, ordinary hours. You can set up different pay categories based on your company's structure and requirements. Next is the ESCT rate percentage. This will automatically determine the employer's superannuation contribution tax percentage rate once the pay rate details have been entered. However, you can override this rate by ticking the Override ESCT rate checkbox. Next is the Irregular Employment checkbox. Tick this box for casual employees working on an irregular basis who are entitled to pay-as-you-go 8% as opposed to the 4 weeks annual holidays entitlement. If this checkbox is ticked, then you must also apply the Irregular Employment Leave Allowance template associated. The leave allowance template will allow you to set different types of rates of leave accruals for different groups of employees. If you want a group of employees to accrue 4 weeks of leave per year and a different group to accrue 6 weeks of leave per year, you can create a leave allowance template for both scenarios and then link each of the employees to the relevant template. Another benefit of leave allowance templates is if there are ever any changes to be made, you can just update the template and the changes will apply to all employees that are linked to the template. So using an example of the leave allowance template is the irregular employment. This is the default template set up in the system and can be used for casual employees and is not to accrue the 4-week annual holidays. With the irregular employment checkbox and the leave allowance template applied, the pay-as-you-go 8% will auto-apply in the pay run for an employee. Then you can select whether or not you want your employees to use the timesheets. You can click on Next, which will take you through to the tax declaration step. This section is for entering the tax code declaration information for the employee. The IRD number is a 9-digit IRD number. In regards to the source of income, this follows the same flowchart questionnaire as the IR 330 tax declaration form on page 2. Alternatively, you can enter in the tax code field as indicated on the employee's completed declaration form. If there is a student loan, this rate is 12%. However, if the IRD has approved for the employee to have a special deduction rate and the certificate is provided to you, then you can click on the checkbox and enter in the student loan rate and the deduction rate end date as specified in the certificate. And lastly, enter the date the employee signed the tax code declaration form in the date signed field. Once that is all completed, you can click on done and your employee is now set up. You can add a new employee by clicking on add another employee, or you can go directly into your employee's profile. Now I'll be showing you the leave pay rate settings. So from the employee file, go down under pay run settings, pay rates. The purpose of the leave pay rate setting is to configure the applicable calculation method to be applied in a pay run for daily based leave and weekly based leave. So for daily based leave, that is sick leave, domestic leave, alternative holiday leave, and for weekly based leave, we're talking about annual holidays for an employee. The default settings for each employee is set to relevant daily pay, and for annual holidays, it is set to the ordinary weekly pay of the agreed rate. There's a tooltip which shows and explains each of the methods to be applied. So for relevant daily pay, which is RDP, this generally is paying an employee that is working on a regular pattern what they would earn if they were at work on that day. For the average daily pay, this is generally for those that work on an irregular basis where you cannot determine their relevant daily pay, in which case we'll then go back and do a calculation of the employee's pay going back 52 weeks of the historical data, which I'll be showing you later how we can upload the historical gross earnings. In regards to the OWP calculation method, this is determining the annual holidays rate. So the greater of your average weekly earnings and your ordinary weekly pay. So as part of the ordinary weekly pay, there are two options. There's an agreed rate and there is a full weekly pay. So the OWP agreed rate is the amount an employee receives under his or her employment agreement for a normal working week. So relevant to an employee, once again, working a regular working pattern. If you are unable to determine whether the employee is on a regular working pattern or you can't work out what the agreed rate is, then you would need to apply the OWP for weekly pay, which will then look back at the employee's 4 weekly pay going back historically and then working out the formula from there as an average. Once you have determined which calculation method should be applied, just select it from the drop down and click on Save. I will now go through the employee historical gross earnings export and import. The purpose of importing historic gross earnings is to assist in determining the average weekly earnings when an employee takes annual holidays, especially where the business has moved from one payroll system to a new payroll system. Please note that the historic gross earnings export has no impact or relationship at all with the employee's year-to-date earnings for the current financial year. As mentioned earlier, the historical gross earnings is used to correctly calculate the average weekly earnings, as 52 weeks worth of the previous gross earnings is required to calculate the average weekly earnings for annual holidays. To download the historic gross earnings export from the payroll dashboard, go to your Payroll Settings tab, Opening Balances, then on the top here under Export, select Historic Gross Earnings. Select the appropriate data type and file format. So I'm going to select the default, which is template with the employee data, and download. When you export the template, just bring it up and it will open up in the Excel spreadsheet. You will notice that there are 3 tabs based on the pay schedules that the employees fall under. So weekly, fortnightly, and monthly. Your employees will be assigned to the relevant worksheet based on the pay schedule they are assigned to. As all the employees are all under the monthly pay schedule, they've all been populated in the relevant tab. The next column to complete is the last period ending. This relates to the period end date of the last pay run that was processed in the business's other payroll system. Once this date is entered, each period ending column will pre-populate based on the value of the last period ending field and the pay run's frequency. Any manual override of these values will cause an import error, so please do not manually update any dates. I'm going to enter the 1st of September 2019 as the last period ending, because I plan on doing my first pay run in the new system as the 2nd of the 10th. So you'll notice how all the period ending dates are pre-populated to be the 12 months of the historical. The next field to complete is your period gross amount. In these columns, you must enter the employee's gross earnings that would constitute average weekly earnings. And each gross earnings must be separated by a pay period, otherwise the employee's average weekly earnings will not be correctly determined. The last column is the period by hours. In these columns, you must enter the number of hours worked and paid by each employee for the relevant pay period. If your file includes employees on each worksheet, you must ensure all worksheets are completed, otherwise you will receive an error at the import. Once you have completed the historic gross earnings spreadsheet, make sure you save, and now I will show you how to import this spreadsheet. Once you have completed all the fields, you can import the template from the Opening Balances Business Settings screen again. So going back to the screen, you'll notice that there's an import button on the right hand corner here. Just click on that. Select the file and confirm upload. Once the file has imported, a status summary will be displayed as shown on the screen there. So what you will see there, if you go back to the employee list and select one of the employees within the opening balances, Historic Gross Earnings tab. The import information for their historical gross earnings is saved there. Moving over to Payday Filing, the new and departing employee details reporting, you will need to provide new and departing employee details to the Inland Revenue. These details need to be submitted on or before any new employee's first payday. As shown before in the webinar, I had Payday Filing method to option connect to the IRD gateway services within the business IRD settings. To start reporting your new or departing employees, go to Reports, over to the IRD reporting section and click on Employee Details. You will need to connect to the IRD gateway services to start using the service. So to do this, just click on the Connect button as shown here. The following pop-up will appear. You will need to confirm that you wish to connect to the IRD gateway services by clicking on the OK button. Clicking on OK will direct you to the My IR login page. You will need to enter in your business My IR login and password details. You must log into the My IR via the payroll system so that the integration between the IRD and the payroll system is connected correctly. Once you've entered in My IR user ID and the password, just click on the login. Once you have successfully entered in your My IR details, you'll be directed back to the Payday Filing Employee Details report page, which will show you now that you are connected to the IRD gateway. So we'll be showing you the gateway services is connected here, and you will now see the upload to the IRD gateway services button here. So once you can see that, you can now start lodging your employee details directly to the IRD. Now that login that you've just logged in as part of the My IR portal, that should be a one-off login. The only time you would need to log in again is if you've changed your password. That will automatically pop up again for you to reconnect, where you will do the same process by entering in the user ID and your new password if you've changed it. And then you'll be able to also use the Payday Filing employment information and the Payday Filing employment information amendment from that one login. So before you lodge a report to the IRD, on the screen will show you all the employees that need to be lodged. So this could be any new employees, in which this case they are new employees. Also, if you have any departed or terminated employees, they will also show on the screen and they'll be highlighted in red. Once all details are correct, you'll find to click on the Upload to IRD Gateway Services button. And once that's complete, you'll get a successful completed message. If there's still an employee showing within the page, you may just need to resubmit that again just to clear it. It may be a limited restriction when you're processing to the IRD that they can only take a certain limit of employees at a time. But if you just click on the Upload to the IRD Gateway Services again, that should hopefully clear the last lot of employees showing from the list. And that means that all employees now have been reported as part of the new and departing reporting once it's all cleared from the screen. Now that we have reported our new employees to the IRD, we can now move on to the next part of the webinar, which is processing a pay run. So from the payroll dashboard, you will need to click on the new pay run option, which is up here. The alternative is going from your left-hand menu and going down to pay run. This pop-up screen will appear where you will need to configure the details of the pay run you would like to process. You will need to select the pay schedule and then the pay period end date. This end date will also flow on from the last period ending date entered from the historical gross earnings export import as well. Once you've done that, you can click on the Create button. Then this is what your created pay run will look like. You can see here the pay schedule and the pay period dates in the top left corner. You then have the relevant pay run tabs across the top here. The Actions tab is the one I will come back to in a moment. The Filter tab will allow you to filter the pay run to show any certain employees in the view. The pay run can be filtered by any of these options. Then you may see the Warnings tab. If there are warnings in the pay run, it's always a good idea to make sure you do click on this tab and look at the warnings. Some may not require any action from you, but if they do, there will generally be a link to follow to fix the issue. Then if there are any pending leave requests within the pay period dates, then the Leave Request tab will appear. You can approve and apply the leave request to the pay run by clicking on the Apply button. So you can bulk apply by clicking on here, or you can do it by per leave request by clicking each Apply here. Alternatively, you can just mark as applied manually. For now, I'm just going to bulk apply and apply them into the pay run, which provide a pop-up to give you the details of the leave request. Once reviewed and happy, just select Apply Leave button. And that should have automatically applied to the employee question, as you can see here. We'll go back to this later. Back here on the Actions tab, you can see the Finalize option. So once the pay run is complete, you can finalize it. At this point, you also have the option to delete the pay run. Once a pay run has been finalized, there is no option to delete the pay run. And you will also need to be aware that if you do delete a pay run, this cannot be restored or recovered. So make sure you are confident when deleting any pay runs. There is, however, an option to unlock a pay run after it's been finalized, so you can make any adjustments. I'll get to that process later on. The next option here is the Pay Run Actions button. Here you have a couple of other tasks available in the created pay run. You have the option to add a message, add an employee, adjust the pay period dates, import timesheets, export or import a pay run. There are a couple of reports you can also access, and then you can view the draft pay slips if you need to have a look at them before you finalize the pay run. Underneath all these options, there are all the pay run details for all included employees. You will see all the employees' names listed on the side and all the headings for the included information across the top here. If we click on one of the employees' names, this will expand their earnings, so we can see the details of those earnings. Some of the detail here includes the pay category, the location, number of hours, and the hourly rate of the employee being paid. You will also notice that leave does not accrue per pay run. This is intentional, as it's not a concept found in the Holidays Act 2003 for New Zealand. Looking at the next employee, so Josh Hornet. So Josh has accrued their full annual holidays entitlement. The annual holidays entitlement will automatically kick in the relevant pay run period that the employee's employment anniversary date falls within, and will be included also in the employee's leave balance once it's been accrued. So Josh has reached his 12-month anniversary date. It's accrued full entitlement of 4 weeks of his annual holidays. We look at the next employee to show you an example of the sick leave and domestic and violence leave. Sick leave and domestic violence leave will automatically kick in also in the relevant pay run period of when the employee has reached their 6 months after their employment start date, and also the entitlement continues every 12 months thereafter. Please note that it's 12 months at the beginning of the end of their 6-month period. It is not 12 months from the employee's start date. The sick leave is capped at 20 days, and DVL, domestic violence leave, is capped at 10 days. You will also see the sick leave and the domestic violence leave within the employee's leave balance within the pay run. Moving on to the next employee in the list, I will show you what it looks like when an employee has taken annual holidays and how annual holidays is calculated. So in the pay run, when annual holidays is processed, the equivalent earnings line will show an I icon to the right of the pay rate. Clicking on this icon will display a context panel which details how the hourly rate for the employee's annual holidays has been determined. As you can see, it's broken down into 4 sections. The average weekly earnings, the ordinary weekly pay 4-weekly formula, the ordinary weekly pay agreed rate, and also their holiday pay 8%. You will notice the different color text, so black and gray in the panel. This is based on the selection within the employee's leave pay rate for the OWP, so the ordinary weekly pay calculation method. The selected calculation method will display in black text. So in this case, it is the ordinary weekly pay agreed rate. Whilst the non-selected ordinary weekly pay method will display in the grey text. In this case, it is the 4-weekly formula. The reason being for this is because should the employee's work pattern change during the pay run period, you can override the equivalent earnings line pay rate to the non-selected ordinary weekly pay rate if required.
It just saves you from having to go into the employee profile, into their leave pay rates, making that calculation method change, saving, and then running the pay run again. This was just it's displayed, showing active and disabled state, but showing all the calculations for convenience. So I'm going to step you through each of the calculation methods now. So for average weekly earnings, it's calculated using the employee's gross earnings over the 12 months, just before the end of the last pay run, before the annual holiday is taken. Divide that figure by 52, then dividing the total by the employee's standard working hours per week. In this case, the employee's standard working week is 40 hours. For ordinary weekly pay for weekly formula, this is calculated using the employee's gross earnings over the 4 weeks, before the end of the last pay run, before the annual holiday is taken. Divide that by 4, then dividing the total by the employee's standard working hours per week, which is 40 hours per week in this case again. Regarding the ordinary weekly pay agreed rate, which is the calculation method we had selected as part of the employee's leave pay rate, this is the employee's normal hourly pay rate, as this is usually the amount the employee would expect to receive. If an employment agreement has a special rate for the ordinary weekly pay, that is an amount other than the employee's primary hourly pay rate, this rate must be compared and the greater of the two amounts must be used as the ordinary weekly pay rate. You can apply the special ordinary weekly pay rate by overriding the equivalent earnings line rate within the pay run. So you can adjust it in here. Going back to the panel, we also have shown the holiday pay section here, simply for informational purposes. Hence why this is showing in grey text as well. This amount is relevant where an employee's termination pay needs to be processed and the employee has not reached their 12-month entitlement period. So for annual holidays, it's always the greater of the average weekly earnings and your selected calculation method for the ordinary weekly pay. In this case, the greater of is the ordinary weekly pay agreed rate and is the default applied under the annual holidays earnings line. I will now show you a daily based leave calculation. In this example, it is the sick leave taken row. So clicking on this icon will display the context panel, which will show both the relevant daily pay and average daily pay calculations. The calculation method selected within the employee's leave pay rate section will show in bold text, and this will be the default pay rate applied for the daily base leave type. The calculation method not selected within the employee's leave pay rate will display in grey text. Once again, the reason being is should the employee's work pattern change during the pay run period, you can override the equivalent earnings line pay rate. So for relevant daily pay, this is the employee's normal hourly pay rate. If the employment agreement specifies another special rate for their relevant daily pay, then this can be overwritten within the earnings line under the pay rate section here. Once again, if there is a special rate, this rate must be equal to or greater than the actual relevant daily pay. If this is the case, then you're fine to override, but if not, then the standard agreed rate must be applied. In regards to the average daily pay, This is calculated by using the employee's gross earnings over the past 52 weeks, divided by the number of whole or part days the employee has worked, which includes any paid leave or holiday during that period. Then that total is divided by the employee's standard hours per day. In this case, it's 8 hours per day for this employee. So moving over now to the Actions button. This is a very handy one to be aware of with a number of actions available. Here you can do things like add earnings. This is handy for paying earnings that are a one-off instance like overtime or working on a public holiday. To do this, you would click on the Add Earnings option at the top. Click in the relevant pay category. This will automatically apply the 1.5 rate. Enter in the hours. And the total will automatically update. You can save those details. The other thing to note regarding working on a public holiday as part of New Zealand is if an employee has worked on a public holiday on a day which is on their normal working day, they are entitled to an alternative holiday leave. If this is the case, you will need to apply the alternative holiday leave manually. To do this, you can go to the Actions line, Accrue Leave, select Alternative Holiday Leave from the list, and enter the number of days that the employee is entitled to. So one public holiday worked for an employee that's worked on their normal working day is entitled to one alternative holiday leave. Save. And that will also appear as part of their leave balance. Please note that if the employee has worked on a public holiday on a day that is not their normal working day, then they are not entitled to the alternative holiday leave day. Okay, so that covers all the details in the pay run. So all that is left to do now is to finalize. To do this, you need to click on the Finalize option, and then you will see this pop up where you will need to configure the payslip and notification options. Publishing the payslips for employees is making them available for employees to be able to access and view or download. You have the first option here, which is to not publish them. Then the second option will publish the payslips straight away. If you select this option, you will then also need to configure whether or not the employees will be notified that their payslips are available. Then the last option gives you the ability to publish the payslips at a time in the future. For example, if you want to finalize your pay run on a Friday, but you don't want your employees to be able to access their payslips until the following Monday, you can set this up here by entering the required date and time. And again, also configure if you want the employees to be notified. I'll also just mention at this point that if you have elected to publish the payslips but not send the notifications, the employee won't receive their SMS or email to let them know the payslip is available, but they will still be able to log into their employee self-service portal or their WorkZone app to view or download their payslip. So once these options have been configured, you can then just click on the Finalize button. This will then finalize the pay run and publish the payslips if this is what you had selected. And now this is what your finalized pay run will look like. You can see here a few things have changed. You no longer have the option to delete the pay run. And the Payday Filing button is now available. So this leads us into the next process, which is the Payday Filing Employment Information Report. So to submit the employment information, click on the Payday Filing button. Clicking on the Payday Filing button will take you directly to the Payday Filing reporting page. The first time you are using the IRD Gateway service, you will need to connect to the service which was previously shown in the new or departing employee details report. As we had already connected to the IRD, we do not need to connect again. So when you are ready to lodge the Payday Filing employment information, just click on the Submit Payday Filing button here. But just make sure that you've reviewed the details here, which is pretty much the details from the pay run. And once you're happy, you can just click on Submit Payday Filing. Once the Payday Filing employment information has been submitted successfully, the status, lodged by, and the IRD receipt number is populated on the screen for you, as you can see there. The Check Now button pretty much pings the IRD to get an automatic update. You would normally not see an update here for 24 hours to 48 hours. So this process here is based on the IRD processing the report. And this will then submit to Submission Received. If you have submitted an employment information and need to make changes to an already finalised pay run, you will need to unlock a pay run. I'll show you how to do that process now. So you can go back to the pay run by clicking on the button. So to unlock the pay run, go to Pay Run Actions and click Unlock. Enter in a comment. Unlock, and that will unlock the pay run for you. Go in and make any adjustments required. Save. Once that's been done, finalise the pay run again by clicking on the Finalise Pay Run button. The following pop-up will appear again. Click on Finalise. And you will notice that the Payday Filing amendment file has now been generated. So if you click on the Payday Filing amendment button, this will take you directly again to the Payday Filing reporting page. You will then notice the status of amended, and the Payday Filing history of the original employment information file and the amendment file can be found on the bottom here. So clicking on the original will show you the original file that was submitted. Then clicking on the amendment will then show you the amendment file. When you're ready to submit, click on the Submit Payday Filing, and then the status will successfully update once you've submitted. Once again, for both the employment information and amendment payday filing, once a return has been filed, it can take up to 24 hours or longer for the status to change. You may wish to contact the IRD to follow up on the processing of your payday filing if it's taking longer than usual. Remember, the Check Now button within the status line allows you to check the polling status updates from the IRD. Once payday filing is processed by the IRD, then the status will be updated from submitted to submission received.
That is the end of the New Zealand Payroll webinar. Thank you all for taking your time to attend. If you have any questions, please contact your payroll provider.